Morning, everybody. Mike Vacchi here from Mr. Topstep with your Friday morning pre-market webcast. Yesterday was an interesting day. It was a really wide range day, especially since we had the kind of day that we had on Wednesday. At this point, if you look at a daily chart of the ES, the 20-day exponential moving average is absolutely resistance at this point. It's been resistance for the last 3 days. And it was support for a long time, and now it's going to be resistance, and that's the way these moving averages work. So building on that, you really have to look at the bears really having their best chance, I'd say, in the last 6 months to a year to really roll this market over. They really haven't had this kind of an opportunity since the U.S. had their AAA rating taken away back in 2011. And with losing the 77 level yesterday and getting down as low as 66, it opens up the potential to retest the 52 half level. And if the 52 half level is tested and breaks, then you're starting to look at things more towards the 200-day exponential moving average, which is sitting down at 1300. But that's a discussion for weeks from right now. And you have to take all of that with a gigantic grain of salt. And that is this. The Fed is still handing out free money as fast as they can print it. And that dynamic is not going to change. And in order for the dip buyers to be run out of town and for prices to head down significantly, the Fed is going to have to not get their way. And that hasn't happened in a long time. So know that if you're building a long-term bearish thesis, that the dynamic has not changed and you continue to fight the Fed at every turn. Okay? That makes me say that what we are doing here really is an actual pullback, maybe as deep as the 100-day exponential moving average down at 1330, but that pullback ultimately is a buy, simply because of the environment that the Fed has created. So just when it's going to look like things are going off the cliff and it will never get any better, you're going to see a bid come into this market. So be prepared for that. So that's the long and short thesis over a little longer term time frame. I usually just give you what's going to happen in the next 8 hours, but this chart is setting up to do some things on a longer term basis that I think need to be discussed. Now let's look at today. You got the daily pivot sitting at 1376. Our current trade is 77.5. We did as high as 1380.75, and you got the 20-day sitting above at 81.5. You've got 66 down below, and you've got 81.5 and then 86 above. So we're really kind of in no man's land right now between 86 and 66. We're trading 77. So let's see how it opens up. I mean, we're going to gap higher here, but today's options expiration. So, every month I say be careful. But the way it's tended to go, at least from my feeling, is that any of the options expiration jiggles kind of get worked out on Wednesday and Thursday. And we certainly had a lot of jiggles the last couple of days. So we'll see if we're setting up for kind of a boring session today. We certainly should get an inside day today, simply because of the range that we saw yesterday. I mean, basically from 90 down to 65 half. So, I mean, if today is not an inside day, it's really going to move. It's really got to do something. So, use stops and be hedged. Be aware of the global risk. Nobody's been talking about Europe too much. I mean, we had the Spanish bond auction, which I guess went very well. But just remember, don't be holding too much overnight or holding too much over the weekend unless you have a really good stop on that you're comfortable with and are hedged a little bit. Let's do support and resistance. Current trade 78.25. On the upside 81.5, which is the 20 and 45-day pivots together. They're identical today. Then 1383, 1386, 1390, which is yesterday's high, and take that up to some fib levels up at 1395 to 1396. On the downside, 1376 daily pivot, 1373.92 3-day pivot, and 1371.67 9-day pivot. Then I've got fibs at 69.5. 50-day exponential moving average comes in around 66, and you've got fib levels. So 66, 67 gets pretty congested, and you can put the 65 half low from yesterday on the bottom of that band. So 67 to 65 half, you got a support band there with 1362 below that. Okay, so everybody have a fantastic weekend. Mike Vacchi, Princeton Trader from Mr. Topstep. Trade 'em well, everybody. I'll see you Monday morning with another webcast.